Hi, and welcome back to Hedge Fund Manager. I'm Carl Michael Seiding, and we are continuing this deep dive into Novo Nordisk today. We are looking at the technical analysis and what is technical analysis. What we are trying to identify or establish is what useful, that means reliable trends, are other investors creating as they try to maximize their returns. So remember, the technical analysis is the method of looking at the stock price trends and patterns in order to see and discern whatever actual real decisions are being made behind the scenes, so to speak. What the myriad of decisions that other investors are making, that creates price channels, various recurring patterns and cycles. It creates resistant levels where the stock price has a difficulty going through. So yes, we do anthropomorphize simply because there are humans and human programmed robots doing all these trades with real money. That is what's creating all these patterns. And the more successful you are, the more money you have. And the more money you have, the more power you have in terms of creating these patterns involuntarily. Because at the end of it all, money is driven by fear and FOMO, fear of losing money, fear of missing out on gaining money. The money is governed by fundamental trends as well as stock price trends. And that is what's creating these recurring patterns. And what we are trying to do is just analyze the stock price trends and patterns and see if we can establish whether it's more or less likely that a certain trend will continue or perhaps reverse direction. What we are looking at are, again, these channels, supports and resistance levels. We're looking at peaks, maybe double or triple peaking patterns and troughs in the same way. We are trying to establish if other investors are feeling urgency or if there are weak hands at certain levels that are likely to sell out because they start to feel more fear of losing money than they are feeling fear of missing out on gaining money. The most important pattern we use is the 200-day moving average. The 200 moving day average, it's the long-term sum of all things, you could say. It includes earnings reports over almost a full year. It includes emotions. It includes whatever financing other investors have. It includes index-hugging funds, inflows and outflows. It includes whatever media is reporting and whatever fads the news cycle is exhibiting. It includes whatever regulation is doing over almost a full year. So the 200-day moving average, it's the sum of everything, and that is what's creating a long enough trend to stay above or below the 200-day moving average. And the 200 moving day average will always be chasing the stock price, or the stock price will be in a way magnetically pulled toward and even through the 200-day moving average. As you can see here in this 1 to 2 year long chart of Novo Nordisk and the thick blue line here, which is the 200-day moving average, you can see how it tended to stay above, actually pulling more and more ahead of the 200-day, which is a sign of increasing bullishness and euphoria. Once it lost this momentum, it went all the way down to just about exactly the 200-day moving average, which is typical. It's because so many people and funds are watching the 200 days. So this is a very likely pattern. So right here at the 200-day, after such a long positive trend, this would have been at least a good speculative moment in time to buy the stock short term. However, once we again challenged the 200-day, not once but twice, and going through, this is quite a negative signal for the stock. Like right here, especially after this failed attempt to recover and not even getting all the way up to 200-day. This is actually such a weak point in terms of technicals that you could almost have sold the stock short only based on the 200-day moving pattern and the movements around it. However, that's not what we are doing in the hedge fund manager school community. What we are doing is doing a fundamental value-based analysis and investing calls. And the technical analysis part is just a slight headwind or tailwind. But here, the headwind became really strong. However, now we are below the 200-day. That is negative, but we are also far below the 200-day, and that is a bit like here, where it's positive to be above, but it's negative to be too far above, because that is a sign of euphoria. And this being this far below, it's a sign of more of a depressionary state and too much negativism. So this could be actually be a slight tailwind. And we can also see, if we add a 50-day moving average and a 20-day moving average, we can see how, yes, these trends, these moving averages are very negative, and the 50-day is still falling pretty quickly. But the 20-day moving average, it has at least corrected upward slightly over the last, let's say, 20 days. And the stock price is now actually above both the 20-day and the 50-day. So this is actually slightly positive. These are not as strong patterns as the 200-day, but it's definitely something investors and technical analysts are always checking out. So this is maybe the first sign of a turn upward, and coupled with the huge distance to the 200-day, I would almost want to bet technically that we will at least challenge the 200-day, and it's pretty far off. So going up from the current share price of about 465 or so, and perhaps approaching 650, I mean, that would be a really good investment from a short-term perspective. But what we really want to know is the stock cheap enough to bet on long-term? If it is, then this is also a pretty good technical setup. So I would summarize the technical setup with that is actually pretty positive. Now let's turn to the general market. We can see that the S&P 500 share index, it's above its 200-day. It has actually tried breaking below once and bounced. This is kind of a positive sign. And however, there is definitely a risk that due to other fundamental factors we will break down below again. But for now, this is actually a positive technical formation. And then finally, I would like to add this time the final magic number technically wise, TA wise, and that is the Fibonacci number. Because Novo actually fell by just about 62%, or actually 63% from its high of 1,035 to 379 or so. And the Fibonacci sometimes is focused on by some technical traders, and especially perhaps for Novo Nordisk, that never falls by more than that. So this could actually be setting up to become a really positive technical setup. It isn't right now, but it's definitely close to showing real positive strength.